Go now to our guest, Michael Harvey, head of franchise trading at Galaxy Trading. Michael, welcome to Galaxy Brands.
Thanks very much. Excited to be here.
Very excited to have you. It's always nice to talk to people that aren't BIMNet. No offense to BIMNet, love him. But it's rare that we have a different person sit in for BIMNet. He's on vacation, as I said at the top of the show. Michael, you see client flows, you see market flows, you're a volatility expert. Just right off the bat, what does this market feel like to you, generally speaking?
This market feels priced to perfection.
So not bullish, not bearish, just perfectly in the middle?
Yeah, I mean we're climbing the wall of worry, right? Equities are within a breath of all-time highs, which I think they reached last week.
Mm-hmm.
You know, financial conditions have been easing since April. You've got still a couple of rate cuts priced through the end of the year, 52 basis points, I think. So, just a little bit more than 2 cuts priced.
Mm-hmm.
You've got a market that's disregarding, the potential for the tariff, monster to come back.
Right.
Which I think is the point where we're, everything is Goldilocks right now, and you've got the market back to the highs. You've got benign inflation. You've got good, labor market numbers with payrolls beating last Thursday.
Mm-hmm. Unemployment coming, 4.1 at
Yeah.
4.3
Yeah,
expected?
I tend to look at the payrolls number just, more than the unemployment, but, there's a lot of things that go into the unemployment, like participation rate, for example.
Yeah.
But everything is benign.
Everything's
right?
pretty
And
decent.
all the fears from April when the tariffs were announced have been pushed firmly to the, to the back of people's minds. You've got a strong retail bid in equities, for example.
Mm-hmm.
Yeah, I just think, everything is so perfectly priced that, the one thing that Trump wants and needs is lower interest rates.
And that has been shifted out. I mean,
Yeah, exactly. And you've got several people on the Fed, the minutes came out an hour and a half ago, several people on the Fed saying, we're not quite sure that we need, the magnitude of rate cuts that the market was pricing previously. We may be closer to the neutral rate going forward than we think, right? But Trump needs lower rates. And this gives him the dry powder to be a little bit more belligerent on trade.
so you're saying he's got a little bit of a longer leash because he could go hard on markets. Everything's looking pretty good. So it's not like, markets are currently nice. He could go and, be harsher on trade. And if markets react negatively, then a positive side effect is likely pulling forward rate cuts.
Correct.
Yeah, which he wants.
Yeah, he's also got his big, beautiful bill
That's right.
passed, which is 20 to 50 basis points of added GDP, but, 300, odd trillion of debt or whatever.
Yeah. Yeah. I think 3 or 4 trillion over 10 years.
Yeah, sorry, not 300.
But yes, I mean, like it's not paid for.
I think it's 300 billion additional debt.
It's near-term bullish and long-term bearish.
$5 trillion deficit. Yeah.
Yeah.
And so,
but it spends a lot of money in the economy, is your
right.
point.
So it juices the economy short term at the expense of potentially inflation.
Yeah.
Right. And so you get this scenario where the Fed's cutting into a potentially inflationary backdrop, which causes the yield curve to steepen, which is a trade that, everybody's got 2 trades on, right? One is short dollar, the other is the steepener.
Yeah.
I don't see any reason necessarily for those trades to stop working. DXY is taking a little breather.
Mm-hmm.
I think it can go another, 5 to 10% down pretty easily.
It's like 97 right now, DXY.
Yeah, exactly. And if you look back, if you sort of zoom out on the chart, it's still a little bit above sort of long run average.
Yeah.
So it can go a little bit lower from here. But yeah, I mean, everything points to, I think, right now it's very benign. So there is scope for a pullback if he gets more belligerent.
I see, and he's got a little bit of leg room. Who knows? Right now, I think he said on tariffs that what was the headline we saw? Like August 1st.
August 1st, basically.
And that one I won't extend. He's saying basically.
Yeah, you can't take anything he says at face value. I mean, basically, Bessent asked him to push out the deadline.
Yeah.
Right. The deadline was today.
Yeah.
They've pushed it out to August 1st. They've sent all these form letters out, which is a little bit comical. I expect, really what's going to move the needle is Europe and China.
Yeah.
Right. And they haven't sent letters. They're still trying to negotiate. I still think you want to watch India and Japan for potential deals. Look, if we start to get deals, then, we won't get the pullback. But I think there's just a potential that, that he starts to make a bit of noise, again, with the view to making sure that we get those rate cuts.
Yeah, he needs them. It's part of their policy plan. They need rates lower. Remember the one of the main things, they want the 10-year down, and it's been stubborn.
It's going to be hard to do that, though.
Yeah.
Right? The Fed controls the front end of the yield curve.
Yeah, and also the market feels like now just little short-term things and gimmicks like aren't going to do it. Like we need long-term fiscal sanity, and you're not getting it at all.
You're not going to get that until you get, I think until you get rampant inflation.
Yeah. Let's talk about the treasury companies. I know, there's a lot of them. We talked with Jason in the upcoming interview about sort of the high level, but like, are they buying? I mean, are they, I mean, we know MicroStrategy is buying. Who else are we seeing? Are we seeing actual flows? I got tons of announcements, but are we seeing any flows?
Yeah, I mean, absolutely. You've got MetaPlanet doing their thing. It's a bit unique just given the mechanics in Japan, but they're buying. There's a lot of copycats that are buying as well. The theme of recent weeks has actually been, the ETH treasury companies, and ETH is getting a lot of eyeballs recently.
I mean, Tom Lee, he upset a lot of Bitcoiners. He's a long-time Bitcoin bull, and he was saying things like ETH is the next Bitcoin. I think was literally the quote. And first of all, we know he's a lot smarter than saying, like, we know he doesn't literally, he must mean ETH treasury play is the next Bitcoin treasury play, or sort of it's the next institutional asset in his mind. But that's still, nonetheless, that's a big deal. Tom Lee, he's a fun strat. He's a big investor.
Yeah.
He's also perpetually bullish and has mostly been right about that. I feel like, remember if you looked at the start of was it the start of last year? There was the predictions and it was like, everybody was bearish and like had different things. And Tom Lee was just unabashedly calling for like 6,000 S&P and was right. It was by far the only one that was right. Like, but he's just a perma bull.
Yeah. I think the treasury company stuff is, people are going to wring their hands over it. Is this bad for Bitcoin? Not in the short term, right?
Yeah.
No one's hand gets forced in that game. I think for longer than the market is, or longer than some pundits are saying, right?
Yeah.
This is I liken this, and of course it's completely different, but from a psychology perspective, to me it feels like we're in 2004 or 5, approaching the great financial crisis, right? People knew the property market was a problem 3 or 4 years before anything actually happened, right? And you just sat there and had to deal with it for 4 years, like knowing that it was unsustainable, and yet it just continues to go. And I think psychologically we're in that position right now with Bitcoin treasury companies where, they're not all that levered,
right?
And they have a long time before they have any kind of debt to roll.
Most of them are pretty small. I mean, Saylor is obviously huge, but I think it's like 18% debt to his Bitcoin NAV. It's really not that much. And then the other ones, to the extent they even use debt, and I think many of them will not be able to really tap debt markets, they're just pretty small. Even if they raise $1 billion, like that's not that big. So I agree. It doesn't feel, but there is that sense, to your point about before the housing crisis, it does just sort of intuitively feel risky. It feels like it's leverage and it's like,
well, and to your point, it doesn't have to blow up spectacularly. You just have to have some of these equities start trading below their their NAV essentially, right?
And then they can be like a
then
drag.
They can't buy anymore, and then they're kind of just a zombie company.
Yeah.
They can go out and they can sell their Bitcoin and buy their stock, but what is that?
Surely
that's not great for the whole
I don't know, but
complex.
like surely it's one thing for like many companies to have Bitcoin or digital assets on their balance sheet. Like that's fine. They own a lot of stuff. But this like all one asset treasury strategy company, surely there can't be 200 of these things. Like how many can the market bear? And I know there's different capital markets, and maybe like you mentioned, Japan has these weird rate dynamics, and other jurisdictions have capital control. So maybe there's good reason for one to be here and here, or but I mean, truly, how many of these can there really be? I mean, we're about to find out.
Yeah,
right?
we're going to find out. I think
Yeah.
I think there'll be some consolidation.
Yeah.
Right. Like as with everything else, is there a reason to have 1 or 2 of these things per jurisdiction, per geography? Sure.
Yeah.
Right, where they really can do it at scale and they can issue the debt and follow the Saylor playbook.
Yes. But 5 or 10.
Well,
20,
hundreds? No.
Hundreds, yeah. We are going to find out, though. I guess that's going to be exciting. I wonder how long it takes for us to find out. Maybe a year? There should be some clarity
and
over
again,
the next year.
I think the ones that they don't grab the public, attention, will just start to trade below their NAV value, and then they'll just be a takeover candidate,
Yeah.
right?
Do you think?
Some bigger treasury company just comes along and says, "I'll take your Bitcoin for
Yeah.
80 cents on the dollar."
It's so interesting. Yeah, I agree. I don't think a lot of people ask me this. They feel that intuitively feel there's real risk here. But yeah, I mean, the only real risk is that they sell some of their Bitcoin, and they'd only do that to close a shortfall. I think I guess the other risk is that, like, I mean, if there's hundreds, I mean, how many of these can actually be managed very well? Like, they could screw up.
Yeah.
Some could screw
Yeah.
up.
Again, I mean, look, to me right now, they feel like they're more diamond hands than
Yeah.
an ETF holder,
Yeah.
right? They can sell anytime they want.
We did that chart, and it was, and it's MSTR and Metaplanet are the only ones that I actually pulled. I think they're really the main sizable buyers from the corporate side, and they just buy all the time, no matter what. And the ETFs were huge inflows in January, huge outflows in February, more moderate outflows in March, then inflows in April. Like, it's much more volatile, the ins and outs. You're right.
Yeah, we thought a lot of the outflows in Feb and March were really the people that had the 1 year of holdings, right?
Got it.
So
That makes sense.
cap gains related.
Yep.
But broadly speaking, just to go back to tie it all together between Bitcoin and macro, you've got relaxed financial conditions, you've got a big spending and tax cut bill, you've got potentially lower rates. Like it all screams to, at some point, like dollar debasement.
Yeah.
Right. So that's a theme that, of course, everyone's keyed in on if they're looking at Bitcoin. But we see hard assets are going to benefit, right? And that's one reason why the stock market's higher as well, right? Is people are pricing in, printing money, right? So that's good for stocks, it's good for gold, it's good for Bitcoin.
Mm-hmm. Well, there you have it. It's going to be an exciting summer still. I thought it was going to be. It definitely has not been sell in May and go away. By the way, like, we've had a pretty uproarious June. Was a big month, right? I mean,
Yeah, it's quiet, but again, you've got a looming tariff deadline, you've got a debt ceiling,
right.
Debate coming up.
Yep.
August and September is
Yep.
kind of analyst best estimate. So
Yep.
there's going to be a few things on the horizon to keep us on our toes.
Well, we'll be here, and I can't wait. Thank you, Michael Harvey, head of franchise trading at Galaxy.
Thanks very much.